Welcome everyone to our webinar today. We'll just give it a few minutes and let everyone join, and then we'll get started. Just while everyone's joining us as well, I've got Hayley from our customer support team here in Sydney here with me on the call today. You'll see her potentially in a little black box. She'll be there answering or helping to manage the chat as we go. So you'll see Hayley popping up in the chat as we go. And yeah, she'll help us to manage all of the questions as they come in as well. I might just go through some housekeeping before we get into the content for today. For those of you who haven't joined a superhero webinar before, as part of our webinars, we do have a live Q&A at the end. So if you could please use the Q&A function, which should be at the bottom of your screen, to ask any specific questions. We'll make sure we get to those at the end. And we can also use the chat. Feel free to comment along as we go. Hayley's going to be there in the chat as well. But for any specific questions, please post those in the Q&A so we don't miss them and we can get to them at the end. And as Hayley will note as well, we are recording this webinar, so it will be live on our YouTube for anyone that's unable to stay for the whole time. So it'll be live on our YouTube in the next couple of days as well. Amazing. I'm going to share my screen and then we'll be able to get started. So should be all right for everyone now. Today, we are going to be chatting all about investing in volatile markets. Now, we'll go through a bit the past couple of months. We've seen some interesting things happening in the market. So, something I'm very interested in, and I'm keen to talk to you all about it today. Just to clarify that Superhero does not provide financial advice that considers your personal objectives, financial situation, or particular needs, and all investments carry risk, so please consider carefully before investing. Past performance is not indicative of future performance, and any pictures, graphics, and charts that you see today are provided for illustrative purposes only. So what we'll look at today is what's happening to the stock market at the moment. So we'll look at some of the performance. We'll also look back at the last 30 years and what's happened to the markets at different times in the world over the past 30 years. We'll look at some strategies that people might use to minimize some of the impacts of volatility on their investments. And then we'll actually have a look at what some of the experts are doing over in the US in terms of their recent investments as well, which is always an interesting one, the likes of Warren Buffett, of Berkshire Hathaway, and Cathie Wood of ARK Invest. So to start off, let's have a chat about the market in 2022 so far. As you can see there, this chart represents the biggest 200 companies listed on the Australian Stock Exchange and kind of what's happened generally to the market this year, so since the start of the year. And you can see that the market has dropped about 4.6%. This graph was from yesterday. Since the start of 2022. Now, obviously within this, there are companies that have performed better than this and companies that have performed worse than this. This just represents, I guess, a representation of the overall market. And so the Australian market is influenced by what's happening locally, but also heavily influenced by what's happening globally. And when we look at some of what's happened, with rising interest rates and inflation over in the US, we're seeing some similar trends happening here. And then thinking about the last couple of years, COVID, issues with supply chain, getting products to Australia. We'll go through what some of this might mean in a minute, but we can really see some global impacts then coming through and also affecting the Australian market. When we look at the US has seen very, very high inflation over the past couple of months. You can see there it hit a 41-year high of 8.5% in March 2022. And to go into a little bit more about inflation and interest rates. So inflation is the rate at which a currency is falling. So it means that the same $10 that you might have used to buy your groceries is buying you less of those groceries than it did before. So the cost of goods generally is rising in real terms. So your money buys you less. And when this happens, governments normally put in different policies to control that inflation. one of which is increasing interest rates. So when interest rates are increased, essentially that means that borrowing money becomes more expensive. So, and you can see there, higher interest rates tend to negatively affect earnings and stock prices because of two main reasons. Borrowing becomes more expensive. So companies that are, trying to borrow money to grow their business, their costs of borrowing that money increases. And it also means that interest rates are increasing. The general consumer has less to spend because they might be spending a little bit more on their mortgage or things where they are borrowing money. And so it also can impact the revenue a business is able to generate and therefore the growth rates there as well. Again, this is definitely not the case in all cases. It's not the case for all growth companies, but just talking generally about some of the market forces that tend to affect the markets. Conversely to that, when we have a low interest rate environment, which we've had over the past couple of years, that makes borrowing cheaper. So it means that consumers are willing to spend more, the businesses as well are wanting to borrow more, and we really see growth start to come from that as people are borrowing money to then grow their businesses. And the chart on the right here, this just shows the inflation rate in the US since 2008. So you can see it really, dropped off there. And over the past couple of years, we've seen quite a low inflation rate, but that has spiked quite significantly this year. So it kind of explains a little bit more about what's happening in the market. Now, we've had a look at this year, but what's really important to do is actually look at the trend, over the past 30 years. And it helps you to understand a little bit more the different forces that impact markets going up and down and different events that happen in the world as well. So I've highlighted a few here for us to look at. Sorry, my bubble's actually not on quite the right spot, but just to highlight a few times where the market has looked a little bit more volatile over the past 30 years. If we start to the right, we see what happened during COVID. So during 2020, we saw a sharp decrease in the markets, but they really bounced back throughout 2021. This obviously doesn't show 2022, which we've just looked at, but you can see that 2020 to 2021 change in the markets there. And if we look back 10, 20, 30 years, we can see this has happened before in terms of the markets being quite volatile, potentially having some time of decrease before coming back. So you can see there the GFC, which happened around that 2007, 2008 mark. You can see the markets really dropping off there and then coming back. And we can see that's happened again previous to that with the dot-com bubble burst around 2000, 2001, where, again, the markets saw a drop-off before coming back again as well. So look, the markets, as you can see, they're always volatile in the short term. There's lots of different factors that influence that, from, global things happening through to population changes, political changes, technological advancements as well, and innovation. So there are a lot of both macroeconomic factors and microeconomic factors that affect the markets. But what you can see is that volatility over the long term, can even out as well. Again, we don't know what's going to happen in the future. All we can do is, look at the past, learn from the past, and do our research. So when we look at the last 30 years of performance of different types of assets and different geographies, you can see here, and this is from that same chart, that if you had $10,000 in 1991 and you invested that in the overall Australian market, and this is, assuming that you held on to that throughout all the peaks and falls of the market. If you just held on to that $10,000, that would be worth $160,000 in 2021. So that is a 9.7 average return per annum or per year over that 30 years. So again, even though there was times of decrease in the market, if you'd kind of held on to that, through all of that volatility from 1991 to 2021, you would have on average achieved returns of 9.7%. So there would have been years that were better than that and years that were worse than that, which gives you an average over that time. And you can see there the different percentages for different asset classes. So for US shares, that same amount would have had a 10.8% per annum average return. You've got listed property, so that's kind of property that is on the stock market, the likes of real estate investment trusts and things like that. International shares more generally, Australian bonds and cash as well. So yeah, just an idea there of how, I guess, over the long term, volatility can even out to a sense. And we'll go through some of the strategies people can use to help with that as well. So to get into these strategies, essentially no one knows what's going to happen to the market, but there are some strategies people do use to minimize some of the impact of volatility on their investments. And one of these is diversification. So as we know, investing in shares or any other asset that's not fixed or guaranteed in its income does carry some risk. And diversification is a strategy used to reduce this risk by allocating investments across different asset classes or industry sectors or companies. And to put it in colloquial terms, it is not putting all your eggs in one basket. So think about it this way: instead of putting all of your money into one company where all of your money is determined by if that company performs well or doesn't perform well, if we compare that to an exchange traded fund, for example, which is an investment listed on the stock market where you get exposure to a range of companies, whether that's 50 companies or 100 companies or 30 companies, it gives you access to the performance of all of those companies. And so your investment isn't determined on one company's performance, but on the balance of, depending on how much of each company is in the ETF, but it gives you exposure to the performance of all of those companies. And again, even with exchange traded funds, there's a range of different exchange traded funds you could buy. So you could buy Australian exchange traded funds, you could buy international, and this goes for companies as well. You could buy in the technological sector or the financial sector or the consumer sector. And again, all of these different sectors have different market forces that act on them. Some market forces will affect all kind of investment sectors. We saw that happen in 2020 where, pretty much the entire market reacted the same way. But you've also got different factors that impact different sectors, whether that's technology or finance or mining. So you can diversify across different asset classes and different sectors in order to, diversify that risk for you. And you can do that either by selecting a range of different companies or by investing in one or more different diversified investments, whether that be exchange traded funds or other diversified investments available on the stock market. Now, another strategy that people might use to minimize the impact of volatility is called dollar cost averaging. And so for those that haven't heard of this before, dollar cost averaging is an investment strategy in which an investor divides up the total amount to be invested in a share across a number of periodic investments. And for the purpose of this description, we'll look at investing in one particular share and then kind of dividing up your investment into different periodic investments. So for example, instead of investing $10,000 at one time into Tesla, we've got here, again, this is just an example, this is not advice, but instead of investing $10,000 at one point on that chart, and you can see there's a lot of ups and downs. So, it's kind of back to the point of time in the market beats timing the market. It's very hard to time the market. Even the experts do not get it right all the time, far from it. So instead of trying to pick that perfect point or the lowest point at which to buy in and putting your $10,000 in, what you might choose to do is to invest $1,000 every week for 10 weeks. And you might pick a Monday morning, or you might have a different strategy, just depending on your own personal goals and objectives. But you could invest $1,000 over 10 weeks instead of $10,000 at a time. And what that does is, if we were to pick 10 points on that graph, you can see there might be some ups and some downs, and that reduces the impact of the total volatility on your investment. Now, to compare that to a slightly different way of breaking up your investing, if you like, is looking at long-term consistent investing. And this more goes back to that 30-year chart, where there are years where the stock markets do better than others. And, no one knows what's going to happen in the future. So long-term investing is a strategy where if you want to set a goal and a budget to invest and invest consistently over time, you can really start to break that up and invest regularly and consistently. And what you can see on the right here is if you stick to your investing strategy and continue to invest regularly over time, there's something called the power of compounding. And so this means, and you can see here, the dark blue is the amount someone might choose to put in to the investment market. And now, again, this doesn't have volatility put into it. So this is looking at an average return over 20 years. So just keep in mind that this doesn't represent the markets, and the markets are much more up and down than this, but this is based on a $100 monthly investment over 20 years with an average return of 9.7%, which was that number that we showed in the graph before. So if we look at this, if someone put in $100 a month, over 20 years, they would have put in $24,000 and they would have gotten interest of $49,000. So at the end of that 20 years, their investment amount would be $73,738. So that's just putting in $100 a month over 20 years. And what we can see here is over time, the amount that they've received of interest or of growth, as opposed to the amount they're actually putting in, grows. So you're getting compounding returns. And an example that I've written down on the left here is if you have a 10% gain on $10,000, you've made $1,000. Whereas if you have a 10% gain on $11,000, which would be the next year, if you like, you'll have a gain of $1,100. So you see that not only does your whole investment increase, but the gain you're actually getting from that increases as well. So again, it just shows that long-term, regular, consistent investing can help to minimize the impact of volatility over the long term, because you're getting in just consistently over time, and there will be up times and there will be down times. But over the last 30 years, we have seen an average increase of that 9.7%. And just to put this into practicality and compare some of these strategies side by side, I've got a great graph here from Russell Investments actually that showed investing $12,000 a year for 10 years using different approaches. So we'll go through them one by one. Now, number one is extremely unlikely to ever happen, but just to show you, this is if someone invested in the share market at the perfect time or the lowest time in the market, where you could say you're getting the biggest discount or resulting in the highest return each year. Ideal yet implausible, as it's written there. So if you did that, at the end of 12 years, you'd have $189,885. Now, if we compare that to someone who simply invested on the 1st of January each year, that person at the end of 12 years would have $184,000. So you can see there that, and again, this doesn't predict the future, but if you're relying on perfect timing versus just investing on the 1st of January, the difference in your gain or the end result of your total investments isn't that big. And perfect timing is pretty much impossible. Then if we look at dollar cost averaging, and this again isn't saying what's going to happen, but someone who dollar cost averaged over that same time, where they invested equal dollar amounts into the share market at regular intervals. So for example, here it was $1,000 on the first day of each month for 20 years. That person gained or had at the end $177,000. And then the last one's here, perfectly wrong timing. So this is someone who invested at the highest point each year. Despite bad timing, this person still had $167,000 at the end. And then when we compare that to cash or not investing at all in the share market, you can see there that that's the biggest drop off. So the purpose here is just to show that pretty much no one can time the market. number one, it's important to be in the market and have that time over the long term in the market. But yeah, you can see there that different strategies people can use to minimize the impact of that volatility. Now, taking a little bit of a different look now, I popped these ones in here because I like to look at them and see what some of the experts are doing. In the US, some of the big investors have to publish what they're investing in. And so I thought we'd have a look at Warren Buffett. Now, Warren Buffett in the first quarter of 2022, his Berkshire Hathaway or his investment, the company, he grew his stake in Occidental Petroleum, which is an oil company. So just an interesting one there, going into automotive and more into oil as well. These both are now part of the company's top 10 holdings. And you can see there the top holdings on the right. So we can see that Warren Buffett's someone who is quite diversified. Top holding by far is Apple there, the largest company in the world. But you can see there he's really diversified across industries. We've got Apple, which is tech. We've got Bank of America in the financial sector. We've got back to financials with American Express, some consumer companies with Coca-Cola and Kraft. We've got oil, and then a few others there. Activision Blizzard's quite an interesting one. Warren is quite an old man now, but Activision Blizzard is, I think it's a gaming animation company. So he's definitely, dipping his toe, or more than dipping his toe. You can see there, I think that's the $5 billion of investing there into these new up and coming industries as well when it comes to tech. So while Warren has, some very big holdings, he's very diversified across industries as well. You can see there, he also added more to his Apple holding in the most recent quarter. And he's bought into Paramount and HP for the first time, which is quite interesting. Don't know whether anyone's gotten Paramount Plus recently, in addition to the Disney Plus, the Netflix, the Stan, and the Binge as well. But there's some good shows on Paramount Plus as well, and they're really starting to go into that consumer, direct-to-consumer market as well. And Warren's actually got an investment there now too. And to look at a little bit of a different strategy, Cathie Wood is well known for her investments in disruptive tech. So companies that are really trying to change the industries that they're in quite significantly. And she's particularly known for her large holding of Tesla, which was the largest holding in her ARK ETF. So Cathie Wood has a range of different ETFs that are listed in the US. So you can buy these on Superhero. There's a range of different ETFs, and they're all under that ARK banner. So ARK is her company, but her biggest ETF is this ARK Innovation, the Disruptive Innovation ETF. And so we've just looked at what some of the investments in this ETF are. Recently, Cathie has doubled down on her investments, including Coinbase and Tesla, despite other investors selling these stocks. So, even among the experts, there are very different opinions when it comes to what is the best investment at any one time. And an interesting point that Bitcoin is also an interest of ARK. The firm actually filed for a Bitcoin ETF in the US recently for a second time as well there. So when we look at Cathie Wood, we can see that she is quite concentrated in tech in this particular ETF. And, Zoom, Tesla, Block, which recently purchased Afterpay, and some of these really disruptive tech companies that we saw have a huge boom during COVID, she's still very bullish on. So some others there, Coinbase, the crypto exchange, Twilio, which is a kind of messaging service there. And she's quite into disruptive healthcare as well. You can see Teladoc there, which is kind of online and telephone health. Now, before I jump into questions, I know there might be a couple of people on this webinar that are new to Superhero, so I just wanted to run through. We've spoken all about investing in the stock markets and diversification and a few different ETFs. So I just wanted to run through some of the features of the Superhero platform quickly, and then we'll get into questions. But with Superhero, you can invest in Aussie and US shares, and that's individual shares and also exchange traded funds or ETFs, which will often give you exposure to either one whole market. So that might be the Australian index or the NASDAQ, which is a big US tech index, or you can invest in particular sectors as well. So Superhero has a theme section where you can look at different ETFs that might be US tech giants or global sustainability or Australian banks. There's a range of different ones there. So you can definitely jump on and have a look if you're interested. And just to let you know about our pricing as well. So it's $0 brokerage to buy Australian ETFs, $5 brokerage on Aussie shares and to sell Aussie ETFs, and then $0 brokerage on US shares and ETFs as well. Again, that's all within the platform. So when you go to buy a share, you can see all of that, but just wanted to let you know that as well. And just a couple of other features that we have. We've got real-time deposits with PayID. So if your bank offers PayID, you can set up an instant deposit into your account, into your wallet. And some other cool features we've got is live market data. So you can see what's happening to the stocks. Tax reporting when it comes to tax time. We've got a reports feature as well, where you can easily download reports about all of your gains. And you can also earn Qantas points. So if you link your Qantas frequent flyer in your profile, you can start earning Qantas points as well. And we've got some more information on our website if you want to know the details of that. And for anyone currently investing with another platform, you can also transfer your shares in if you like. So again, just a very brief highlight of some of the features on Superhero for those that are new. And very quickly, how to trade shares with Superhero. So again, you can sign up pretty quickly either through our website or download our app straight away from the App Store. You can make your deposit with PayID or bank transfer if you like. It just might take a little bit longer. And then it's pretty simple from there. You can browse all of the different shares and ETFs. You can actually see there the one I spoke about, the ARK Innovation ETF. We've got little flag filters that you can see there too, whether that's an Australian listed share or ETF or a US listed share or ETF. And you can filter between the two with a little flag filter at the top. And then you can go and invest. And you can see there the US tech giants example, which is a themed ETF on our platform. And that brings me to the end of the content. So I'll just jump into the Q&A and have a look. Thank you so much, everyone, for joining us today as well. You can see a few in the Q&A tab. Amazing. And feel free, anyone, if you do have questions, I'm going to go through a few now. So jump into the Q&A function and give us your questions. So question here, is there a robo-advisor in Superhero? No, we don't offer advice in Superhero. So what you can do is come onto our Invest tab and you can start to browse all of the different investment types there. So again, we've got our themes, which are themed ETFs. We've got all of the other ETFs available on the Australian and US exchanges. And we've got individual shares as well. So feel free to come on. We don't offer any robo-advice or advice, but you can browse different shares on the platform. Question around, are the numbers on the graphs, were the graphs adjusted? Phil, we'll provide you with the recording of this webinar afterwards, and we've got the sources there for all of the graphs, so you can go and have a look into more detail as well. And managed funds. Now, that was a question about, does Superhero offer managed funds? Superhero offers any exchange listed funds, so any ETFs or licensed investment companies that are listed on exchanges, publicly listed. There are other managed funds you can invest in that aren't publicly traded on the stock exchange, but Superhero doesn't offer those. We offer publicly listed exchange traded funds and other funds. So just to clarify there. Can you open a Superhero account with a self-managed super fund? Yes, so that's actually something I didn't mention. Superhero has a range of different account options. You can come on and open an individual account, or everyone gets an individual account when you sign up, but then you can go and add different account types. So from your profile, you can add a self-managed super fund if you've got a corporate trustee at the moment. That's what we offer. So if you've got a corporate trustee with your self-managed super fund, you can open a company account or a trust under a corporate trustee. And you can also open up a minor account, and you can invest on behalf of a minor as well. So just to let you know that way. In terms of Australian and US shares, those all happen within the same account. So there's no need to toggle between accounts. You can transfer between Aussie and US dollars in your wallet and then just invest in Aussie and US shares, and you'll see it all in the one place. I saw there was a question about fees, which Hayley has just answered in the chat for us. Thank you, Hayley. And just to go through a few others, sorry, just give me a second. Okay, David had a question about what type of investment strategy to adopt in the current market conditions. Unfortunately, David, I can't provide you any advice on that one, and no one knows what's going to happen to the market. So, it all depends on your investment strategy and your goals and your budget. We went through a few of those strategies today around that long-term consistent investing or dollar cost averaging. Again, you don't know whether it's going to go up and down, but what you can do is kind of plan your investments accordingly, whether that be you're going to invest at the same time regardless of what happens. But it really does depend on your own goals and strategy. But definitely look at some of that content there that was in the slides, and the comparison too between, over the last 12 years, what happened to those different strategies. I think it was 12 years or 20 years. And again, you can really see there that despite the markets being volatile in the short term, which they have been over the past 30 years, there's been many times where the market's gone up and down. It's over the long term and being consistent where you really start to see that average out. Does Superhero offer to trade Australian Treasury bonds? I might leave Hayley to answer that one. We don't offer direct investment into bonds through Superhero. However, I believe there are a range of exchange traded funds that can offer you exposure to those types of asset classes. So maybe do some research on exchange traded or publicly listed exposure to bonds. But we don't offer the direct ability to purchase bonds through Superhero. Leverage trades. Superhero does not offer leverage trades. We had a question there about, does Superhero support leverage trades? No, we don't. So with Superhero, you can invest with the money that you deposit into your wallet. So at the moment, no leverage trades. And a question on our US trading. So we offer zero brokerage on US shares. There was a question there about how we make money on that. So to buy US shares, you've got to buy US dollars, essentially. So you deposit your Australian dollars into your wallet, and then in that same wallet, you can transfer money to US dollars. So between Australian and US dollars, you need US dollars to buy those US shares. And we do charge a small exchange fee in order to do that. But then once you've got those US dollars, you can trade as many times as you want within the US or as little as you want, and you won't be charged any brokerage. So there's just that one fee to go in and out of Australian and US dollars. Hope that's clear. Naomi, great question from Naomi. What do you recommend on where to begin as far as working out goals and objectives? Naomi, there's some really good resources online. A great one I'd recommend is Money Smart, which is actually a government website. And you can go into Money Smart, and that's actually where that graph about long-term consistent investing came from that site. And it's an awesome resource because you can actually essentially think about how much money you want to invest and what time frame, whether that's weekly or monthly. And you can actually input those different parameters, if you like, or those different budgets that you might have. And you can have a look at what that might look like over time. It's a really, really awesome resource. And again, feel free to look at the recording and you'll see the source of all of those graphs and you can go and do some more research. But Money Smart is an awesome resource to get started. It goes through the basics of investing. It gives you all of those calculators to work out your different strategies and goals. But yeah, some great information online. ETF provider websites are also a really, really great place to start if you want to know more about different exchange traded funds and I guess the companies that are involved in those as well. If you're interested in a different sector or sustainability, some of the big exchange traded fund providers like Vanguard, Beta Shares, ETF Securities, and VanEck are really good places to start. You can find more information on our Learn page as well on our website, superhero.com.au/learn. We've got some awesome articles there that send you out and link you to different places to get started as well. I think we're nearly at the end, but one more question there from Crystal. And if we don't get to your question, we'll aim to get back to as many as we can over email after this as well. How do dividends work? Crystal, I believe we've got an article on this on our Learn page on our website. Otherwise, Google is also your friend. But how dividends work with Superhero is not all companies offer dividends. Some do. And we've got some information. If you search a particular stock, you can normally see that dividend or the recent dividend there. But how dividends work on Superhero at the moment is that if you receive a dividend, you'll receive that into your wallet as cash, and you can then go and use that to make another investment if you choose, or you could choose to withdraw that as well. So it'll look like money in your account ready to invest. And in terms of how tax reporting works for that, you can go and download all of those different tax reports in your reporting function as well. So yeah, that's how dividends work at the moment. Is that they'll be as cash in your wallet, and you can then invest those in whatever you choose. And are there plans to allow depositing of US dollars into Superhero in the future? I can't say in the future. At the moment, it's depositing Australian dollars and withdrawing Australian dollars only. Amazing. And Daryl, any questions around our structure and how Superhero works as a company? We've got a really awesome article on our website called How Are My Shares Protected by Superhero? So you can feel free to jump on our Learn page and you'll be able to find that article there, or feel free to come on to our live chat support as well, and we'll be able to answer your questions. And I think we will leave it at that for today. Anyone that we, again, like I said, didn't get back to, we'll aim to get back to you via email. But thank you so much, everyone, for joining and for your great questions as well. I really hope that was helpful, and we'll have the recording to you very shortly. Enjoy the rest of your day.